Friday, Pat. Here we go again. And look at you. Look at that signal and the new hat.
Yeah, brokers are better. I hope everybody, all the fans or millions of people out there, that they bust my chops because I'm fuzzy. Hopefully, I'm making them happy today by going into the office today.
Well, some might not, be
Yeah.
happy that you're not fuzzy, but we won't get into that. So
it does. Some days I think it does help that my face is fuzzy.
Yeah, as long as the content's coming out.
Hey,
So
just 58, turned 58 yesterday. So
yeah, happy trip around the sun. So
yeah,
you're just a kid. So
still a punk. Yeah, 58 going on 18.
Yeah, I got stories. Hey, guess what? Inventory today, 13,710.
Wow. Can you imagine?
Up almost 2,000 homes in a week.
Really? I mean, remember, where did we come from a couple months ago? It was like 46, 47, 4,800.
Yeah. So it's amazing. And it's showing that the number of contracts has gone way down, but we're going to have to wait till Tuesday to see how that shakes out, because we've got that Juneteenth federal holiday in there Monday, so there were no closings. So that's probably going to take the same dip that here's Memorial Day over here. I did the same thing with my mouse. So it's over there. So, but it's the gap that's really amazing. The gap is like 2,335 between new homes coming on and going under contract. So that's pretty wild. I think I'm trying to look at how many of them are new construction, and I'm seeing more and more spec homes being listed on the MLS. And so, and then I saw one more thing here I wanted to share with you before we get into the Cromford data. Take a look at these headlines. Significant cooling nationwide. It's getting harder to sell. Sellers are slashing prices, especially in California. Sellers are going to have trouble getting their prices. This is really recent news.
Yeah.
It's September 2018. Hello, Jackie.
Yeah, that was really interesting news. 2018, huh? This looks like the spot on.
2018. Yeah, seems like yesterday it said 7,000 might be a good time to sell.
No kidding.
Any chance rates are staying where they are once consumer confidence number came in a record low? Yeah, we'll talk about that in a couple minutes. Well, they wanted choices. Here they come. No kidding.
Yep.
Zillow today, for the first time, lowered the price of a house in my community by 13,000.
Wow. Just going back to those headlines, though. I mean, I think you and I are really fast and determined to try to, I enjoy the business, but I just get tired of hype. I saw the hype when I was a stockbroker, and like you said, ignore the hype. I think it's important that people really have to listen to the news and don't let your ego and your emotions, be smart about stuff. Sit back. I mean, look at those headlines. I mean, once again, you and I are not about the hype. We're just trying to bring some details, some straight line details and facts, not to spin it anyway. And let people.
And the numbers I'm going to share with you today are pretty bad. I mean, they're not good. So, maybe this guy's eventually going to be right if he keeps hammering at it. But I've been reading him. I just follow him, just waiting for. I mean, look at this 2018 to 2022. Look at all that equity you missed if you followed this guy religiously.
Yeah.
And that's just not, that's no way to do business. So there is some, well, it's a good way, you get a lot of movement on your blog, I guess. And then YouTubers, and, we talked about it yesterday in the show with Jackie there that, guys showing an example where they took this rental and priced it $600 above the comps. And then they had to lower it down to the comps, and he's going, there you go. This is the end. There's a liquidation sale going on. It's like, no, there's not.
It's important to kind of figure out, sit back and see what the psychology of everybody has been in the last 6, 12, 18 months, and where, what's going to go, the next 12, 18 months, the psychology. Because, we can have the numbers. Remember we talked when we first started this a couple of years ago, the numbers, I can't even remember how I put it, but it was brilliant how I put it. You know,
I
you
didn't
know,
write it down.
remember the numbers, the numbers of psychology. I remember, I have to go back on that and remember, my memory's getting so bad, but talking about, you look at the numbers and the psychology, how everything kind of works together.
Yeah, yeah. I think there is definitely some psychology going on in the numbers that we're seeing today, and a lot of it, is I think warranted.
Mm-hmm.
So I think you can see here, this is the contract ratio,
Mm-hmm.
and it just took a solid turn right around the end of March, beginning of April, and
Mm-hmm.
that's how many people are successfully getting their home under contract, and we're down below 2014 levels, and it's the velocity of how fast it went down that's
Yeah.
kind of a shocker, right? But
Yeah.
that's the impact of interest rates. There's no avoiding it. It's going to be a tough one. Look at the national PMI, where manufacturing's grinding to a halt. There's a lot of bad news out there, and what they
Mm-hmm.
say here, this is what I want to point out. There are many people who yet fully comprehend or accept how hard the brakes have been slammed on in our market. My tip: do not underestimate the impact of these changes. Brace yourself for a bumpy ride in the months ahead. And it's all of the numbers that we're looking at are signaling that if you're a seller, this is going to be a very bumpy ride. And you're seeing it everywhere. There's Chandler.
Mm-hmm.
Okay. You're seeing it in Avondale, and every city is down. And here's our months of supply. It's up to 1.4. So I'm still seeing homes sell.
Mm-hmm.
And I'm seeing, I was looking up a bunch of homes in Gilbert today, and on the market for 6 days, on the market for 8 days. And Jackie loves a hat. She wants a hat. Better get her a hat.
All right.
Hint, hint. So seller financing will be greater use to entice sales listings. It could be. We have, I think, one of the things that I see, and we'll yak about this in a couple minutes here, but
We got a lot to talk about.
when when to write an offer. And Pat, here is your handy dandy chart, and rates are actually going down. Tell me why the heck that's happening.
Well, I think, I keep it simple. Well, I have to get chatty Kathy, but let me see here. Try to get where the heck's my cursor? Um, I mean, they're going down because, how can I put it? 3-4 months ago, I'm going to try to be as cohesive as possible. 3-4 months ago, we did not know what kind of genie was in the bottle, if you really think about it, right? People were talking about inflation. And I was thinking about this on the way over here, because I said I like to look at numbers and try to shake stuff out, but then also I try to make a decision from a psychology standpoint. What is going on? And I got to think about, I said, the genie about 3-4 months ago, nobody knew what the genie was. Now the last 30-40 days, that genie has popped out. Right? The Feds, now they know that it's inflation, because they kept talking about the fact that there's not much inflation. But now they're coming to the table and saying it's kind of like an alcoholic. Like, okay, the guy's got alcohol. He's an alcoholic. Finally, people sit down and it's an intervention. So now I think we're in the intervention time where, now we got to get help. So the Feds have come to help. They've raised the rates 3/4 of a point. I think, as I told you in the beginning of the year, remember I said in January, I think we're going to be in for a rocky year. And it's just going to be a gird your loin, hold on to your thing. It's going to be an up and down, crazy market. But I think the Feds now, I think everybody knows, okay, the Fed is going to tackle this and they're going to get aggressive. And now I think that's why rates are going down, because, the market's saying, okay, I think they're more afraid of a recession than they are inflation now, because they know the Feds are bumping the rates 3/4 of a point. I think we're going to be 3/4 of a point, maybe the next 1 or 2 hikes. So now we know that. Now we're just kind of like, okay, now you see the rates kind of shoveling around here. You're seeing this base now at high 5s, low 6s. Does that make any sense? I mean,
So they're already taken into consideration, and like, instead of saying, well, we're not sure how aggressively they're going to be on rates.
Yeah.
Now they know. We
Now they
know exactly where they're going. So let's go ahead and price this in. And
Yeah.
then now it's kind of pulling back a little bit. But how do we address affordability?
Right. That's the $1 million question. I mean, that's, I think that's where you're going to see prices, pull back. settle back a little bit. We've had a good run. There's still, I mean, but people to say that there's a crash, there's trillions of dollars of equity. Like I said, once again, it's a broken record, but we got trillions of dollars of equity that we did not have in 08 and 09. A lot of the smart guys I've been watching, they're like, even Dave Ramsey said, he goes, we're not going to see, I saw a video the other day, or 2 days ago, he said, not prices, home prices, this is going to be the best time to buy in the next 5 years. He goes, home prices are not going to go down. There's just a lot of supply or a lot of demand out there.
Take a look at these price changes.
Wow.
Actually, on my 7-day moving average, I show 4,000, but this is right off of Cromford market data. I pull mine directly off the MLS. They do just a slightly different calculation, but you can notice how extreme that is. And it's, I think probably the best way to illustrate it is if I can find it here, is the showing our actual prices. It's not going to show. That's not the one I'm looking for. I'll look for it in a second. I'm showing the 2022 prices, right? They're up here. 2021 prices are down here. So let's just compare this June to June, right? People started pricing them at March prices. So now they're pulling them down, but we're still not, we haven't erased the 2022 gains yet. So in asking prices, we're starting to close that gap. And sometimes it feels like it's a little complicated to try to explain, but where people priced up here, and here's 2021, and we went way above, and then we reached a period where we said, wow, we can get whatever we want. And now people are recognizing this very, very quickly.
And I think that's going to help. The sellers, there's always this once again, I know I repeat myself here and there, but there's always this, they don't turn on a dime. There's still this, they're in denial. The sellers are going to be in denial for a couple months. Like, oh, I can get this price. And
my neighbor got. My neighbor, they sold it 2 months ago, but why can't I get, and they're not being stubborn. It's just that you've got to share the data. And so
they can't let their ego get in the way though, too. It's just being, they get, egotist or not ego, but they get hard-headed,
Well, it's hard when you have a home and you want to sell it. And, we try to say it's math, it's not emotion, but sometimes it is. You're selling your house, you've done all the work, but we had one that didn't appraise, but off by $65,000 from our price to what they wanted. And so they wanted us to present, well, look at all the upgrades. Well, whoop-de-doo. Those are upgrades you bought when you had the house built. The appraiser could see them as soon as you walked in the door. In fact, the appraiser actually had a list of the upgrades, but chances are your neighbor probably had the same upgrades. And you just don't know that yet. And Tyler here, next 6 months will show a ton of layoffs. I don't know about the job situation layoffs. That's kind of out of my wheelhouse, but I think you're definitely going to show a pullback in pricing because the jobs no one wants gets filled up. Well, I hope they get filled up. I'm tired of waiting in line everywhere I go. We want this balanced market. It's not going to come without pain. And I think when you look at the example that we shared the other day that says, there's one of our subscribers here laid out that she qualified for $500,000. They wanted to had a rate of 2.75. Now the payment's 57% higher. So they're out. So now what do? Do you sit out for 1 year, and that's going to cost you on a typical 3-bedroom, 2-bath home between $25,000 and $30,000 in rent? Or do you lower your price point that you're trying to get into? And in some cases, that ends up steering you towards a condo. And I would avoid that like the plague because condos are going to start coming down here real quick. So they're begging for new employees.
That's the thing. Yeah. Matt Marino said, the genie was in the bottle, was the federal spending, and now it's causing great inflation. Yeah, he's right. It's the Fed spending, trillions of dollars caused this inflation. So once again, I go back to the fact that I'm trying to split things up mentally into 12 to 18 month time periods versus 1 to 2 weeks or a month. Because like you said, going back to 2021, rates were low. Now we're in this 12 to 18 months. What's going to happen next 12 to 18 months? So I mean, the bottom line is, where are we at? Inflation, we got gas, there's a lot of stuff on the table. The feds are tightening. Yeah.
Chris, HD.
So yeah, I mean, let's just look at it just real simplistically and logically.
Yeah. Well, here's where I see today then. And you tell me what you think. Sellers, if you're thinking at all of selling, I wouldn't wait. Because you're probably not going to get what you think you're going to get today, but you'll probably, you should be very happy with the return that you got on your home. Yeah. Buyers, hey, don't look at a home unless it's been on the market for 15 days. And because that's when the conversation starts with the agent. So 15 to 20 days should be your sweet spot. And don't wait for the price to come to you. You should go to your price. So if you see something you like, and it's been on the market for 15 to 20 days, shoot them an offer and see what happens. So do you think that's kind of where we're at in the short term here through the summer?
Yeah, I think too, like I said, I'm trying to look at the numbers and the data and the rates and all this stuff, but trying to think of psychology. What would I do? You look at psychology, because you can look at all the numbers, but it boils down to the psychology of the seller and the buyer. That's what really starts the markets. And I think the buyer, buyers are kind of like, okay, our jug is filling up back up again. And they're kind of, I think there's probably, correct me if I'm wrong, but I think there's a lot of buyers out there that are like, screw you sellers. We're going to, you put it to us the last year and a half. We're going to kind of sit back now. It's kind of, the scale is kind of tipping back, and now they,
Yeah, I think that's the psychology right
there. They're sitting back. They're sitting back. I don't have to rush out and.
Out of spite. You can keep that house.
Yeah.
So could be a lot of that. Matt here is asking, why are banks letting go of their mortgage departments? That's because the refi business was so strong, and now it's gone, right? Yeah.
So refis are down 75%. The mortgage business is notorious for being a day late and a dollar short. I mean, the refi boom, they couldn't hire fast enough. They were hiring, when the rates started coming down. That's why people saw, refis, take maybe 2 or 3 months to, because mortgage companies were ramping up. They hire, and the rates. I've seen this cycle last several times the last 22 years, and so.
El Moco Taco says article yesterday saying if recession hits, look for more stimulus checks. That's the last thing we need.
Oh yeah,
Let's hope they don't do something that ridiculous, because that's like so. Imagine if you got the central bank raising rates, trying to tamp down inflation, and then you have the Treasury sends you more checks. That's like trying to put a fire out and somebody's behind you with a gas can.
Yeah. Or heroin, giving a heroin addict more heroin. It's like it's not going to help.
I don't know. I think if you are
in VA loan, they're doable, but you have to pay. You have to bring the balance. If the balance is 200 and you're buying a house for 400, the buyer has to come in with that $200,000 to assume it. In 22 years, I've never been involved in an assumable loan. I hear, I know they're out there, but I've never been involved in one.
Do Vegas, never rule out the unexpected. You can't. I think, we just don't know what's going to happen. If you watch a guy named Michael Zuber, he's out of Northern California, Fresno area, I think. Mm-hmm. And if you're on YouTube at all, he's on like 4 or 5 times a day. And he interviewed me once. Great guy. And he has what he calls a buy book. And it's got his criteria for what he considers a good offer price. So even though the market's changing, he says, I adjust some of the fundamentals in my buy book, but it still sticks to my criteria. So how do you spot a deal? Well, it has to fall into this bucket, and this bucket. So he's got a plan. So no matter what the market's doing, if he's out buying properties, they still have to meet his buy book criteria. And so that's it. No matter whether the market's going up or going down, he's got a way of analyzing rental properties. And and doing that. And I think it's brilliant. And he stresses that all the time on the show. Do the work, do the homework.
Yeah.
Um,
Yeah.
And yeah, Jackie, in the 80s, my dad did a lot of those assumables. I like the Economic Ninja on YouTube. There's some really talented people out there, and a lot of great information if you know what you're looking for. But in the mix of that, you got some yahoos out there that
Yeah.
they do, and I'm like half Yahoo, so they spout out numbers, like that. The thumbnail says 50% crash, based on what?
Yeah.
All right,
Yeah.
now, that's just clickbait. Then you get on there, and they kind of give you some puff pieces, some really good numbers, but some, like somebody was asking me the other day, how do you see real estate prices go if we're in a recession? Well, how deep is a recession? What segments of the economy are affected? What caused it? What are rates? So there's no graph that says GDP went down by 2, so real estate's going to go down by 10. I can never answer that question for you.
Yeah. What do you think about? I mean, you take out 2020, the COVID situation. I mean, you take that out. That was really a recession that was just obviously caused by COVID, right? This is going to be more of we're looking at an economic recession now. Too much money in the system. The Fed's playing around with the rates. Yeah. Yeah. And it's it's now, as he said, I'm glad, Jackie, we talked about this a couple of days ago. People can't look at this as a bad thing either. I think this whole situation, there's going to be unsettling, but there's always opportunity in an unsettled market, right?
Yeah. Concentrate on the payment, not the equity right now. If you own a home,
yeah.
Are you in a comfortable payment? Like the subscriber I talked to the other day, her house payment's $1,000 a month. If she were to rent that, it'd be $2,300 a month. I said, ignore the equity. Just close your eyes. It's like looking at your 401k now. Don't.
Yeah.
Just, don't look at it. When do you think the price of nice 2-bedroom, 2-bath condos will be coming? I don't know. I think that condos, you'll see when we start getting more and more of those on the market, you'll see the price go down. But my danger of this is then they raise their HOAs. You know what I mean? It just gets
Condos
crazy.
are tough. Condos are tough. They're like I said, they buckled down the last year since that Florida condo situation. So it's and they the questionnaire, they're always, I always see on Facebook, like in my loan officer community, LOs are always having trouble, with condos. There's always something that pops up because you got to get this questionnaire from the HOA. And if they don't, you can put a contract in this is what just is a damn killer. You get this questionnaire that the HOA has to, the condo association has to fill out. You send it to them in the beginning. They don't get back to you for 3 or 4 weeks. All of a sudden they got some question. It's like, oh no, are you kidding me?
Yeah. 2 days before closing, right?
Yeah. It's just once again, I said this many times. Every time I get a condo, I was like, oh, please cross my fingers.
Yeah. So running it out, we start to see builders offer spot price reductions, buyers under contract starting to back out of homes. There's been a lot of contracts where buyers have backed out. And I think the first thing you're seeing with the builders prior to price reductions is just giving you more upgrades instead of charging you up the wazoo. So I think what's the inventory like? A surprise. Let me look that up in a second. The economy has never been better. You must watch TV. Oh gosh, we try not to get political here, but sometimes we just can't help it. So you want to know inventory in surprise. Let's see. I'm pulling it up here for you. Bear with me. We're going to scroll down here and hit the city of surprise. There it is. And here it comes. 476 compared to last year, 167. Now I'd have to get on the MLS to see how many of those are new builds. I suspect.
What's that number? 476. It's listings. That's listings, right?
Listings. Yeah. 476. And last year, 167. So It's a pretty hefty increase, but there's also a lot of new builds up there too. So I'm not sure how many of those I can probably check out here really quick in the MLS, and I'll do that. So you talk amongst yourselves. Let's see.
Well, I'm going to say another thing too while you're looking. I mean, a lot of people just once again, there's if you look at the situation, there's a lot of people. I was talking to Jackie. Jackie, mentioned this before. The million and above mark. There's a lot of people actually in about the $500,000, $600,000, $700,000 market and above that basically just pay cash for their house.
Oh yeah, yeah.
So that's another factor that people don't realize. There's a trillions of equity. I'm just talking in general economic terms, just to maybe take time. But
I'm not finding the number I want. So,
but I mean, there's a lot of people that pay cash for their house, and just because.
See, now that's why we call her our senior research.
Yeah, 120. Yeah, 129. She's behind the scenes. Look at that.
Yeah, about 129 out of 476, about 25%, right?
Yeah.
Awesome. Thanks, Jackie. So
yeah,
so the cash is still out there, but this is, and that's the challenge in looking at median sales prices, right, for this time of year, because it always goes down in the summer in that high end.
Mm-hmm. Mm-hmm. The median price is kind of a weird number. I was watching this one guy on YouTube. Jeb Smith, his mortgage guy, and said, median is a very tough number to look at because when you saw the crash back in 2008, the median was low. I mean, because but now the median has gone up. So that's kind of a number that is really kind of a weird number to kind of.
Well, it's like grade. It's like school. It's like grading on the curve.
Yeah, like 50% below this and 50% above that.
Yeah. One guy gets all the answers right, and everybody hates him because now you're in the lower. Who's more scared, buyers or sellers? Buyers. Because they're outpriced. They don't know what to do. They're forced to rent. Sellers are sitting around trying to think, do I want this much equity when I sell, or only this much equity? I don't think they're sitting around sweating that. How many mortgage companies will pull the due on sale clause if the mortgage becomes current?
If the mortgage becomes current.
Yeah. Tell us what you think, Matt. I mean, what?
I'm not sure. I think. I'm trying to think what that meant. I'm not quite sure what he meant by that.
Yeah.
The due on sale.
Should I move to Arizona? Well, where do you live, Bitcoin man? Let's see. And then we got another question here. What's the inventory looking like in the Santan Valley area? I'll take a peek here. See. Well, what is a due on sale clause? I mean, that's.
Well, that's basically the lender can say, we want you to pay this loan off, and that could be, well. Perfect example is if I'm just going to give you just an example that popped in my head is if they found out that you had a mortgage occupancy fraud where, you're not actually living in the house.
Oh, gotcha. Okay.
They could say, we'll call them no due. You got to refinance or you got to do something. That's basically a due on sale. Other than that, I mean, that's the biggest thing.
Lives in Pennsylvania and Illinois. And Jackie says, I think they're talking about wraps. Do I move to Arizona? All depends on how much equity you've got out there, and can you sell your home out there? And do you like the heat? We're having a great summer. Monsoons are rolling in now. We normally hit 115 to 118 right before the 4th of July, and we're nowhere near that. Yeah. So it hasn't been a bad spring summer, right?
That's our 122 degree day was like June 21st or something like that, but back in 1989 or 1990,
Yeah. So it didn't have, I can't pull up separately Santan. They roll it into the Queen Creek number. And Queen Creek, Maricopa, and Buckeye, the CMI is almost, in fact, Cromford Report's predicting the Buckeye will be a balanced market. You know when? Next
August?
week.
Oh, next week. Holy mackerel.
Next week. Yeah.
I mean, I can't, once again, I just keep going back. I mean, I think people have to look at this as, as much as people are getting negative and, all the world's falling apart, I think this is going to be for the buyer that's been looking to buy the last year and a half, yeah, I mean, you got to be long-term. I mean, like you said, I'm giving you basic stuff, but I mean, right now rates are in the high fives, low sixes. If the market's, drops, if you got money, that's why I think too, if you think the market's going to drop, if you're looking to buy, leverage yourself and don't put 20% down.
Yeah. Yeah.
I mean, that because when the market goes down, you put 20, if once again, I've said this before, if somebody pays cash for a house, they always say paying cash is safe. But if you buy a house for 1.2 million and the market drops 50%, you just lost 600,000 of your hard-earned money.
Yeah. Yep.
Versus the bank's money, basically.
Bitcoin man loves Flagstaff. Watch that carefully up there. They get a few fires here. I'm not a big fan of Flagstaff. Are you, Pat?
Not really. I mean, good people up there. I just talked to a gentleman that one of our viewers, doctor that lives up there, rents up there, and it's a pretty area, but
it's always windy.
Yeah.
I mean, I used to work in Flagstaff a lot, and it's always windy, and in the wintertime, it's windy and snowy.
I mean, it's great. Don't get me wrong.
There's some nice places up there, nice neighborhoods.
Yeah.
But I don't know. I like Prescott better. I don't have inventory numbers for Ahwatukee because they don't break it out separately. I was just
because Ahwatukee is really considered Phoenix.
Yeah, it is. And I tried pulling that up and see what I could find. It's not coming up. I have to take a look at it on the MLS. When somebody buys subject to, we need water, rain, and money rain. We do. Water's a problem. I couldn't tell with unbalanced market because nothing to buy. Looking forward to normal. Balances out in the end. That's the difference between 2007 and today. Do you remember anybody when prices were going crazy in 2006 and 7 and inventory was way up there? Anybody saying out loud, I'm waiting for this to crash so I can buy?
No.
I did.
Huh?
I did. Oh, Jackie said to pull this up by zip code. That's she's going to pull that up. 85048, I believe that is. Yeah, I was yeah, it's a funny story. It's not funny. It was tragic. I was marriage was not going well. I saw prices getting ready to turn in 2006. I could just see it coming. So we sold our house and we rented. And I remember saying, telling one of my ex-wife's friends, she goes, so what are your plans? And they were building down in Ocotillo there. What the heck's the name of that development there? Something Lakes. And I said, oh, I'm waiting for them to start selling those homes over to Lakes there for 10 cents on a dollar because people were bidding up the lot prices and everything. Sure enough, they crashed. But next day, my ex-wife goes, so we're buying a house over there. How come you never told me? That's not what I said. So
see, the point of that I picked up is don't get married.
Yeah, Fulton Ranch. Yes, there you go, Fulton Ranch. Yeah.
Oh, Fulton Ranch.
So, yeah.
Yeah.
I said, so she just comes in, she's her arms all, so when were you going to tell me we're moving to Fulton Ranch? I said, where's this coming from? But and Fulton Ranch did collapse. I mean, everything down there collapsed.
Everything did.
I was no longer in a buying position.
Yeah.
So enough about my stuff. Let's see. Look to divorce attorneys to increase listing potentials. So I'm 8504. I'm going to see if I can pull that up here. I can't on this chart. It's not letting me do it yet. So I think I'd really like to see. Here we go. 85048. Watch it here with me, folks. Here it comes. New Vegas. 67 compared to 43. That's been that little community that's doing really well. Even now, the listings don't stay on there very long. They're moving in a matter of days still. I think
that's the one that's up against the mountain and stuff, and that little tuck. There's some tucked in areas there.
Yeah. It's proximity next to the airport. I think is it's not a bad commute. saw an interesting video of Repos Las Vegas, seemed really informative, possible first sign. We're not seeing what about Morrison Ranch, Tech from the Top? I was just down there yesterday. That area and Agritopia are doing really well.
Mm-hmm.
I mean, I can't. I'm not gonna pull up that number right now. Just gonna want to, but there's a lot of homes, especially in Agritopia. So you got Morristown's on one side of Higley, and Agritopia's on the other. They're both kind of different. Agritopia's got narrower streets, a lot more trees, really kind of cool looking.
You get the little porches and everything.
Yeah, and they're on the market anywhere between 6 and 15 days. Morristown a little bit more. And I'm not seeing a lot of price reductions there either. Oddly enough, the closing that I have next week, the one that didn't hit the appraisal target, is in Morristown Ranch. And but that's the one that had all the improvements. I mean, it's a cool house. I mean, he's got funny story. He's got every button you can imagine. It's got built-in Wi-Fi. He's got a remote for the blinds that come down in the back. He's got these everything's it's got built-in lights outside, like Christmas lights. You can pick whatever holiday you want, 4th of July, boom.
Oh, wow.
Lights.
That's cool.
It's just awesome. And everything's all electronic, yet it's a divorce situation. His wife, the listing agents are from Arcadia. They have to drive down to Gilbert every time to have her sign a document. And they had to help her set up a Gmail account. And I said, with all of the electronic advances that they have in this house, she can't click DocuSign. So every time we send a document, I'm like knocking on the door. Dave, do you have it back yet? Do you have it back yet? Well, we have to drive all the way. It's a good 45-minute drive for him. So,
wow.
But we have a comment. My daughter is SIL, built there near the silos, paid $750. Yeah, near the silos. That's a neat spot. Really neat spot. Did you ever sell the Scottsdale home you showed us on YouTube? Yes, as a matter of fact, I did. Got through that one. Anyone see progress in new Intel plant over in Chandler? I haven't been down there in a while. I was down there about 3 weeks ago, but I just saw cranes. So
they're moving along. Those plants don't come up. When did they start building that? About a year and a half ago, 2 years ago? I
think they're spending $20 billion of their $80 billion expansion budget.
Yeah. I mean, I'm gonna take a ride down there this weekend, I think, on my Harley, and just check it out, because I always like that area.
What's this here? Community property is she gets the property and you have to move out of the community. That's about right.
That's pretty good.
I hate how some companies don't use DocuSign. One construction company had us print and scan the email back. Yeah. Does anybody use a fax anymore? So,
yeah.
Well, shoot. Well, this has been fun, everybody. Pat, wish you a happy weekend, and maybe just keep that birthday party still going for a while.
Yeah, no, I'm not one to celebrate birthday week or month. One day is good enough for me, so I'm good. We'll have to see what rates. We'll have to see what rates do. I mean, I think there's some numbers coming out. The PCE, personal consumption expenditure, is coming out next week. I said, to wrap it up on my end, I think rates they're settling in here a little bit. We might see another surprise. Like I said, once again, I think the genie is out of the bag. The Feds are going to get tight again. I think we're going to settle in here. The high 5s, 6s. I'm looking at ARMs. I got this one ARM program I'm kind of looking at. So just trying to be proactive. But I think, we're settling in now a little bit. Thank you.
I think so. I think it's going to be an interesting weekend. I did have a really quick question here. Have you had to reduce the price of any of your homes? The one in Scottsdale, we did have to reduce. And ironically, we only got one offer. He listed it right after the peak. You know how we say nobody rings a bell? Well, somebody rang the bell, and then we listed the house. And it was a challenge because the neighbor had sold on this side and the neighbor is selling on that side. How come mine hasn't sold? So it was all my fault. I just had to drop my 1.3 million, 200K to accept an offer, and it appraised for 1.35 in April. That story is repeated all over the valley. So everybody have a fabulous weekend. See you soon, Pat.
All right. Take care, sir. Ciao.